So hello, from June 13th to June 15th, the Brazil-Canada Chamber of Commerce will be hosting the 16th edition of the Brazil-Canada Conference at PDAC, taking place in person in Toronto. We are also hosting the second Brazil-Canada Virtual Mining Conference at PDAC, which started on March 7th and will continue until May 31st. I am Mariana Nadai, Senior Market Manager at the Brazil-Canada Chamber of Commerce, and I'm here today with Jon Hill, VP Exploration at Jaguar Mining. Hi, Jon, and thank you for being here with us today.
Hi, Mariana. Very pleased to be with you.
So why don't you start by introducing yourself and giving us a quick overview of Jaguar Mining operations and a little bit of detail regarding the Iron Quadrangle Mining District.
Sure, no problem. As you heard, my name is Jon Hill. I'm Australian by birth, but I've been living in Brazil since 2005. I'm married to a Brazilian and I have 3 children.
Wow.
And I live in Belo Horizonte here in Minas Gerais state. I joined Jaguar Mining 5 years ago. I'm a geologist by profession, and I've been in a senior role at Jaguar since 2017. Let me tell you a little bit about Jaguar Mining. Jaguar Mining is a Brazil-domiciled junior mining and exploration company with a listing on the Toronto stock market. It operates at the moment focused on the Iron Quadrilateral, or the Iron Quad as we call it here in Brazil, in Minas Gerais state. We have 2 underground mines close to the regional capital, or the state capital of Belo Horizonte of the Minas Gerais state. These mines, one is known as the Pilar mine and the other as the Turmalina mine. And they are basically producing of the order of 80,000 ounces to 90,000 ounces per year on a sustained basis. And that is really the base of the company at the moment. Basically, that's not the whole story of Jaguar. Jaguar really has a lot of underutilized plant capacity. At the moment, we are operating really at about 60% of our installed capacity at both of those underground operations. And we have plans to grow the company after in recent times, really focusing in the Iron Quadrilateral of Minas Gerais state. Why are we in Minas Gerais state? It's got a long history of over 400 years of continuous gold production. The Iron Quadrilateral is a geologically well-endowed region. It's probably the 3rd most endowed region of its kind globally, after the Abitibi and the Yilgarn belts in Canada and Australia collectively. And basically, what's different is it hasn't seen systematic modern exploration as a surface, and the operations that have been in play for a long time have been dominated by major companies. Jaguar has probably the 2nd most largest ground holding, over 50,000 hectares of prospective ground. And now that it has its mines on a sort of stable long-term basis in terms of mineral resources and mineral reserves, we are turning our attention to aggressively exploring our dominant land position in the quadrilateral. And that's really where the company is going over the next 5 years. Really to explore, add resources and reserves, utilize utilized excess mill capacity, and to increase production from that 80,000 to 90,000 ounces per year towards 130 to 150,000 ounces a year.
Wow, nice. And Jon, I know that ESG, it's a topic that we are talking about a lot, especially in mining. And so how Jaguar views the priority of the local community in Minas Gerais, and how is the interaction between this community and the company? And also, if you can explore a little bit how the company is sustaining positive outcomes for both.
That's a very, very good question, and very important, the ESG status of the mining industry in Brazil globally, and very importantly for Jaguar, as we are a publicly listed company, we are held to very high international standards when it comes to ESG. But more importantly than that, we are in Minas Gerais, which is the state of general mining in Brazil. Mining is integral to the culture and history of this region, and our mines, like all the other mines that operate with other companies in the region, they draw their staff and their labor and their services to operate from the local communities in which they operate. Both of our operations, Turmalina, which is close to the center of Pitangui and Pará de Minas, small communities, and Santa Barbara, which hosts our Pilar mine, we draw the majority of our labor from those areas. So we have a very good barometer of how we're doing in terms of our ESG stewardship. What does that really mean? It's how are we engaging with the stakeholders in our operations? Not just the employees, it's their families, it's the businesses that rely on providing goods and services to the mines. And we have a very strong professional team, which involves and includes people who are actually living in the communities around the mines, and they actively engage with the people and the businesses that support us. And importantly, they also engage with the local governments, the local and the state governments, and even federal governments for things like the A&M on the mining rights and the environmental agencies that in the areas that we're working. So it's a very dynamic process. It's something that we take extremely seriously. We engage on a very regular basis with our employees and with their representatives through the unions, and essentially that, we act very quickly to any issues that are raised, and in a cooperative sense, we try to address these. A very good example has been the challenges faced by the communities during the COVID, which has really been with us for well over 2 years. The communities, in conjunction with the mines and all of the local agencies, have really taken on board the challenges, and we managed to navigate very well with through that process. We did obviously have many cases, no direct fatalities, luckily, but also we were able to maintain levels of productivity that, while not reaching the total productivity of the mine, we took some losses. We were able to navigate the challenges, and we've been COVID-free for the last 8 weeks across our organization. So that is something really important to message to everybody. And that's solely because of our community engagement activities and the quality and the openness and transparency of our teams and our management.
Wow, that's nice. Yeah. So let's get back to talk a little bit more about Jaguar's production. Can you explain to us the current production levels and how the effect of market conditions, foreign exchange, and other factors affect Jaguar's exploration plans for the future? I assuming like now and for the future.
Sure. It's also a very pertinent question because the world is facing, as you know, a lot of challenges which above and beyond what one would normally expect. Mining is a challenging business. There's definitely a lot of scrutiny across the board from various aspects. Our productivity at Jaguar, looking back, has stabilized in that range of 80 to 90,000 ounces. And over the past 3 years, our exploration teams have built a solid mineral resource and mineral reserve base to maintain that production at those levels looking forward. What we're aiming to do now is to leverage that and to grow our production through in-mine and contiguous exploration across our portfolio. Let me just talk quickly about the the current challenges that we're facing on the production. And these are really what's challenging everybody. These are inflationary stresses which are being placed. And it all comes down to things like, as a primary industry, mining really utilizes fuel is really driving our cost basis, because we use a lot of fuel, but it also impacts our supply chain, and our supply chain is impacted by inflation, both US dollars and local currency, because our inputs, we import reagents, cyanide, for example, into our plants to recover gold, and also steel balls and electricity, and all of these inputs are facing inflationary challenges. In addition to that, we obviously get paid for our gold, and our revenues are in US dollars, but our import costs are in both US dollars and local real currencies. In fairly recent times, the real has weakened, which does help offset the inflationary challenges somewhat. In the immediate recent past, the real has strengthened against the US dollar, which has put pressure on our margins. But then the gold price has been at relatively high levels. So basically, it's something that we just have to manage through just prudent supply chain planning. Obviously, working on productivity initiatives to decrease our costs on a sort of a unit cost per ton basis, cost per ounce basis, and obviously looking forward. We're in an election year in Brazil. That tends to be favorable to the exchange rate in terms of, weakening of the local currency relative to the US dollar. And even though we're seeing a high variability in the gold price, we are optimistic that due to the global sort of the fact that there's a lot of instability in the world, which tends to be favorable for gold. We do see gold maintaining, fairly high levels, or above $1,800 an ounce going forward. So really, it's something I think we've probably seen a large part of the inflationary stresses over the past year. It's sort of caught up. It's been gradual but constant. We hope that it stabilizes. There might be some more sort of downside, which, as I said, will be offset by weakening of local currencies and productivity initiatives on the mines themselves.
Yeah, so you spoke a little bit about the currency. So that was actually my next question. So what's the impact on the operations of the Brazilian real versus US dollar?
I really sort of addressed that already, but essentially the weaker probably 50-60% of our costs are in local currency. So if the US, and we get paid, our revenues are in US dollars. So if that is maintained, the US dollar price goes up and the exchange remains weak, then that's good for our margins. If the real strengthens, our margins get squeezed.
Yeah.
So we are obviously aiming for all-in sustaining costs probably below $1,300 an ounce, and that still gives us a $400 to $500 margin, which we would hope to maintain. But obviously, it is a challenge, a threat, if you want to look at it like that, and we need to sort of manage through that. Obviously, if we can improve our productivities, which is something we haven't discussed and we do have plans for going forward, that actually contributes to better revenues and better profits in the future.
Nice. So to close our discussion now, can you tell us your overall view and direction for the company to increase reserves and resources over the next 5 years?
Absolutely. Our aim, as I mentioned earlier, is initially to make use of our excess plant capacity. That means essentially doubling our current throughput at our operating mines, and then we have a third mill called CPA, which is on care and maintenance, which also has similar capacity, 2,000 tons per day. So our exploration is really focused on adding resources initially through greenfields, generative exploration programs, which we've now been, actively embarking on since basically late 2020, and those programs, as I've said, is initially to cover our tenements with the sort of baseline exploration programs, geophysics and geochemistry, generate targets which can be drilled. We're starting to drill our first round of projects that we've derived from that. We've got some very high potential targets, all within 10 kilometers of our available mill capacity, and that's what's driving our immediate growth objectives. We're spending, our budgets have improved. In 2020, we were coming off a $3 million a year exploration budget. Now that grew to $6 million a year in 2021, and this year we're aiming to spend about $10 million. Prior to 2020, we focused in our mines, so we had a very good cost per ounce of new resource, around $10 an ounce. Obviously, because we're starting from a zero base on the wider area within our portfolio, our cost per ounce will be above that in the short term. But as we make discoveries and we generate resources and then convert those to reserves over time, we believe our cost per discovery ounce will be still very favorable. We are in a very well endowed area. Our King Greenstone belts here are underexplored, certainly in recent times with modern methodology, and we're very confident that we will build on our already very impressive resource base of in excess of 2.5 million ounces, of which our reserves are about 500,000 ounces, equivalent to 5 years of current production.
Wow, yeah, that's impressive. So is there anything else you want to add?
No, really, we are, as a responsible miner, we are focused on our Brazilian assets, which have underutilized capacity. We have a very prospective, contiguous ground position in an area of Brazil which is mining friendly. We have access to very high skilled professionals to man and the labor force of our mines. We are investing in our ESG, our stakeholder engagement, and we are good corporate citizens in the areas we work. We want our communities to be better off for us being there. And all in all, I think Jaguar presents a very remarkable investment opportunity for people who understand and would like to invest in this particular sector in Brazil.
Wow, that's nice. So I want to thank you very much for your time and support today, Jon. And Jaguar Mining is a silver sponsor of the 16th edition of the Brazil-Canada Conference at PDAC series of events. And for more information about our events and registration, please go to www.brascanchamber.org/PDAC 2022. We look forward to seeing you there. Thank you.
Thank you.